before we see that building, Andrew, we've already talked about how we're financing it, where the down payment's coming from, what the exit strategy is.
Because why would you go see it and waste your time if you didn't know those things?
Exactly.
There is a strategy. The cool thing with this one, and it's by no means a perfect deal, but there is a strategy there to actually turn on some pretty big cash flow.
Yeah. This is amazing. I've never seen this before.
No one ever does this.
No one ever does, other than like the Cushman and JLL and CBRE and
like the sophisticated,
like those like
brokerages,
those like capital market brokerages. But from everything I understand, that's a perfect case to get an above baseline increase.
Welcome back to REI Hot Seat. Jacob Campagnaro is here with me, and we're talking about a real live deal, something that's available. And,
good morning, Andrew.
Good morning. I'm looking forward to talking about this one. I feel like it's been a while since we went over a deal, because a lot of the ones we talk about off camera, it's like, I don't think that's quite enough. It's not quite good enough for us to bring on the show.
Yeah, right. Yeah. And we like, just so everybody's aware, we review 4 or 5 deals and then pick out of those 4 or 5, we pick one that works, right? If it's we want to bring deals that there's always interesting structures or ways to do it. We're not just going to come on and say, hey, make sure you have 40% cash or you're not buying, right? Like, that's not that exciting.
There might be a comment like that today, but no, that's just one of the scenarios. There's a lot of, that's not going to work, or, that's not that exciting. I think you more than anyone just like, I'm picky. I'm not excited about these
deals.
I'm
picky. Yeah.
So anyways, this one's cool because, well, for a couple of reasons. I had spent a lot of time in London. London's where I started investing in real estate. This deal's in London, near Wortley Village, which is a place that I actually lived briefly and is a really cool spot of London.
Yeah, it's a nice little
character. It's like a little character village.
It's like a little old town tucked in the south end of London.
And you would totally miss it. If you didn't know it was there, you never had a reason to go there, you wouldn't even know. And for the longest time, I think I was in London for like 10 years before I discovered it.
Yeah.
So that's kind of how that goes. This isn't exactly in Wortley, but it's not far. So this is one of Jake's listings. Is it available like on the market yet?
No. So this is something that's going to come to market in the new year.
Okay.
We're just finalizing data room. We're in the process. So when we take on a new listing, just so everybody's aware, we're going to look at the numbers that are provided by the owner, by the vendor. And we're going to do our analysis to say, here's our pricing, right? Here's the comps, here's the financing structure. So we actually get a broker, a mortgage broker, or a bank or whoever to come in and give us a financing structure of the deal. Mm-hmm. And then we package it and we go in, we present, we get the listing, right? So now we have a set price. And then we go back and then start building what we call the data room, right? And the data room is going to be basically all the documents proving the income and expenses of our performance.
So give an example. You're gonna have some leases in there?
Or
so we typically have leases, but
no, we would. So you'd have
a rent roll for sure.
We would have leases. I want leases.
Oh,
right?
okay. So
we build our rent rolls off the lease.
Okay.
Right. So yes, we're gonna have a rent roll, and I would hope that's accurate, but it's up to us to also verify that and go through all the lease agreements, right? So we're going to start with lease agreements. There's our income.
Tax bills,
right?
utility
bills. 12-month utility bills.
Any buyer's going to want that stuff anyway.
And that's it, right? And so what it does is number one, it provides us the proof that that's where this building is operating at. But number two, we give access to potential buyers into the data room.
Is there like an NDA?
We sign a CA, confidentiality agreement, non-disclosure. And then we can release that data room to them. And what it does is, so one, it gives the buyer confidence to move forward, knowing that, hey, I've already reviewed and proved all my numbers.
Yeah.
But number two, for the seller, it's a benefit because it actually reduces the due diligence time.
Yeah.
Right? And
you might as well have that all there before it gets tied up.
And that's it. And then before you even come see the building, Andrew, right?
You already have all the documents,
Yeah, you better not call me after you view it and go, oh, the numbers don't work.
I actually had that happen to me on one of the places I was selling, and it like created a tension on a relationship I had with somebody because I explicitly said, I don't want to disrupt these tenants. It's off market. Review numbers first, then decide.
Yeah.
Goes in first, and then he looks at the numbers. And I'm like,
oh, they don't work. Yeah,
I had an exploding moment.
I was just talking about this with, I was literally talking about this with Zach Wilms this morning.
Yeah.
On my drive in, we were talking about it. It happened to me 3 weeks ago, right? Touring a building I have, right?
Yeah.
The guys call me, hey, we're good. Hey, I just want to make sure, did you review the numbers? Are you in the data room? All good. Yeah, we reviewed it all. Looks great. Okay, what's your acquisition strategy? So like I try to pre-qualify people, right? Like how are you planning to acquire? Right? They came up with some ideas, yada yada, and then they toured the building. And while we were touring the building, they kind of asked really odd questions.
Like questions, they didn't know.
Questions that I would have never that you wouldn't usually get from a commercial buyer.
Oh, really?
Right? Like very residential questions.
Oh, so they're just out of their league.
They were talking about, income and expense numbers, and I'm saying, okay, I thought you went through the data room, right?
Yeah,
and then
you haven't seen it yet.
Yeah, and then
so
after
they didn't follow the process.
No, and then we go for a coffee, and lo and behold, they're like, yeah, it doesn't work for us, right? I'm like, come on, guys. So I really, really stress the fact that it's so important to get into the data room for the buyer, for the buyer's agent, for whoever it is.
To know what it is.
It's so important. Like, if we go to see a building, we better have an offer structure already planned out.
Yeah.
You know what I mean? Like, that's how I work with my clients.
So in other words, going to the building is almost part of your due diligence. Like you use photos, you use the numbers, you use Google Street View and maps to figure out everything you need to know about that building.
Yeah.
And then going to it is a very serious move, because now we're getting ready to make an offer.
Going to it for
it's
me
like it's part of due diligence.
Going to it for me is the last step before putting pen to paper.
Yeah.
But again, you talk to anybody I work with, like before we see that building, Andrew, we've already talked about how we're financing it, where the down payment's coming from, what the exit strategy is.
Because why would you go see it and waste your time if you didn't know those things?
Exactly. And most of the time we're seeing buildings that are an hour, 2 hours, 45 minutes away from where these people live, right?
So you don't want to be making that trip unless it makes sense to make that trip.
Right? And then you're disturbing tenants, you're wasting time for the listing agent, for you,
yourself,
right?
Yeah.
It's so anyways, we can harp on this all day, but that's kind of my little rant there. So that's what the data room's for, right? And everything we build has that data room.
And so for clarifications, this could be a Google Drive folder that's like link access only that you would share with somebody.
Yeah, guys, like it's a fancy word for Dropbox, right? Like it's whatever it wants to be. We have a platform that you can sign online NDAs.
Okay.
So we send you a link, you click on the link, there's the NDA, sign, you're into the data room.
Yeah, so then it gives you access. Yeah.
And so it's all digital, you can download, review, all of that.
So I can say what you're doing would certainly, like, because I would do mortgages for commercial deals, like we're talking like 10 years ago, and this stuff wasn't readily available. The seller didn't provide it, and the amount of time it added just to be able to send the stuff to the lender was horrendous. Like if you have all that stuff up front, it's going to speed up the financing process. It's going to speed up everything.
It's interesting, right? Like I remember when I started like 7 years ago now, even 3 years ago, we were doing data rooms, and agents would call us and go, "This is amazing. I've never seen this before.
No one ever does this.
No one ever does, other than like the Cushman and JLL and CBRE and
like the sophisticated,
like those like
brokerages,
those like capital market brokerages. But other than that, like the mid-market guys never used to do that stuff. So then I don't want to, I'm not going to sit here and say I invented it, but we adopted it.
You made
early.
It more common.
Yeah. Cause and guys, for the agents out there that are listening, my last comment for the agents out there that are listening, like your seller should provide you these things. Don't take a listing unless you have provided it, right? There's been so many times where I've seen agents waste their time.
Yeah. Because
they went off of their seller's numbers, and I call them and I say, hey, and we'll see a little bit of this today. So I'm not saying everybody's perfect, but I'll call an agent and be like, hey man, I'm just looking through your numbers here, right? Your taxes are $4,000 even, your utility bills $5,000 even, right? And you mentioned this right before we started the show, right? Your insurance is $6,000 even. It's like,
that's a red flag.
Hey man, like where are these numbers from? Like where are you getting these numbers, right? And most of the time they'll be like, oh, well, the seller just provided them.
Yeah, I want to see a number that ends in some odd number of cents.
There needs to be a decimal
then
point
I know it was a real number from something.
Exactly.
Otherwise, it was somebody's approximation.
Exactly, right? And there's been so many times, Andrew, I'm going through a deal right now. They said taxes were $6,000. I get the tax bill, it's $12,000. It's $6,000 more than they marketed. And I called them.
And somehow sellers always underestimate what their expenses are.
But I talked to the agent. I was like, what the heck?
Yeah.
And they were just like, oh, well, yeah, we didn't have it till now. And I was like,
yeah.
Like, is that who you want to be? Like the person that just...
Yes, but not everybody's doing, like, you're very different in that. Like everything you do, with rare exception, is commercial, multifamily, or mixed use, or industrial. Like, you're in that world speaking that language, working with other people who speak that language. Yeah. So it's very different from a residential agent who might occasionally dabble in commercial, which... that would be very difficult because you're just not going to have those best practices. Like just the sheer fact that and I know who you deal with, like you call up your mortgage guy who does this a ton and run through the scenario with him ahead of time. Here's the different ways we can do this. Great. Yeah. Now I know I'm not going to waste anyone's time. If you speak with another broker, you're telling them right off the bat, here's the ways I see this working.
Yeah.
And you just save people time. The ones who deal with you are going to be like, oh, I'll go back to that guy because he doesn't waste anyone's time.
And so for the building we're looking at today, Andrew, I did have a broker run through the thing top to bottom. So I have 3 different financing scenarios.
Yeah.
I'm not going to share them right now because we're not 100% solidified, and it's not. I don't want that to be public.
Yeah, let's go through some generalities. First things first, because we're like 5-10 minutes in and we haven't even talked about the deal.
Okay, let's get into it.
We're going to go through this. So 34 units across 2 buildings, right?
Yeah.
They're older. They're like 60s build.
I would say 60s build. Yeah.
Yeah, like these are a value add type building. I've actually been through these ones specifically.
Yeah, and so but I'll pause you there because it is 50% renovated.
50. Okay, so 50% of the units
50%
are renovated.
Okay. And it's very important to know that there's brand new roofs on both buildings.
Brand new roofs. So the stuff to be done is what? Like if you were
new parking lot, so they just paved the parking.
Okay, so that's done.
Right.
So a lot of the heavy lifting.
So 150K for the parking lot, probably another 150K for the roofs.
So we're talking more unit renos, cosmetic.
So this is unit renos. Common area in the hallways, the carpets were replaced, painted. Okay. So hallways look stellar. It's really just 50% of the units need renos cosmetically.
Yeah.
The power's all been updated.
Yeah.
So everything's breakers. It's not fuse anymore, right? Because the 1960s building would have had fuse.
Okay, so they did all that.
So there's a lot of and this is all recent stuff, right? So there's a lot of these renovations that happened the last year, 2 years.
Okay.
The unit renos that were done are great. I went in there, subway tile backsplash in the bathroom and the kitchen, new kitchens. Interestingly enough, they have gas stoves in the building.
They have gassed all the units.
It's gas stoves, right? So it's like,
and you could switch away from that, but it could be very difficult with the because you have to run. You'd have to run the actual wire.
You got to run the big
which is
one,
a pretty heavy
right?
gauge. Yeah.
Right. Now saying all of that, okay. How does that look for MLI Select CMHC? Right, that's where my mind goes with it. I go,
is the gas going to be a good
gas
thing?
is a no-no. Right,
Yeah.
You don't want gas.
Yeah, it's there. I mean, I probably wouldn't be something I'd toy with, but let's just take a look so visually people can see. I'm looking at the rent roll right now.
Yeah.
We can see the different rents here. These unit sizes we have 590 square feet. We have some that are 700. Those would probably be the 2 beds. Yeah, actually, some of the 1 beds are in the 700s as well.
Mm-hmm.
But yeah, so we've got some larger units, but yeah, like generally these are kind of like Toronto-sized units, and the rents on them, you've got market rents at $19.90 for the 2 beds. And there is one here that's a little bit bigger that's at $2,100.
Yep.
Okay, and then a lot of the 1 beds we're getting into that $1,700 range. And were these your estimations, or were these provided by the seller?
It was a combination.
Okay.
Yeah.
And so then we have a column here for the current rent. I mean, very few are anywhere near the market rent. There's a couple.
Mm-hmm.
There's a couple of the 2-bed ones. You could tell these would have been the renovated ones. But we know what's been happening to rents over the last couple of years.
Yeah.
So they just haven't been able to keep up.
Yeah. Well, yeah, these are rents that we've pulled from the market today.
Yeah.
Right. We've looked in the area, Wortley Village, Old South London, and we're looking
rents
at
are
it going
up so much in London. It's insane.
Yeah.
Like 2 beds going for $3,000. Like that's happening now.
It's crazy.
Yeah. So
I look at these numbers and I'm like, you know what? For a decently renovated 2-bedroom unit, the layouts are great. I've been in all the units, and the layouts are like top notch. You got a nice big living room, separate kitchen, dining room area, and 2 bedrooms with a bathroom. Like it's a nice proper layout.
Yeah.
I would be confident with these numbers.
Okay.
Yeah.
So the point of showing all this is just that we have current rent and then we have the estimated market rent. Now, of course, you'd want to double check those numbers, but I mean, there's a lot of room for growth there in terms of profitability.
Is that my spreadsheet that shows you the percentage of growth?
63%.
There we go. So we have 63% upside in this building. So
63% increase in rent possible.
So more than 50%.
That's pretty significant. So that's where the upside is. So physically some stuff's been done to the building, but then we've got that room for upside and growing the rents. Now, of course, how you do that in Ontario today, there are ways, but there's going to be natural turnover too over time. Yep. Of course, a lot of people won't want to leave. I couldn't blame them.
Yeah, and so I think there's 5 vacancies in the building currently, Andrew.
Yeah. So those are primed to be renovated.
Those are, I think 3 of them are renovated.
Okay.
And then the other ones are not renovated. So there's some right off the bat, you can get in there, start doing some renos.
Yeah.
You got 3 that were just renoed. You can lease those out, get going on it.
Like as a market, London's a 1%. like vacancy rate.
It's very good.
Like it's super low. I'm ballparking, but it's extremely low.
I think it's 1.6.
Is it 1.6?
What do I have in there in the performa?
I estimated, so I put 1.6 in now.
Okay.
We'll put that in for now. I don't know exactly where it is, but it's a low vacancy rate. So this building is higher than market vacancy right now.
Correct.
What's the reason?
The renovations.
The renovations, so they were already working on stuff. And
so I was there on Thursday this week.
Yeah.
The week before Christmas, just so for anybody listening. And there was renovation crews there while I was on site. So they are still actively working on this
so they're
building.
working on these units. Okay. So let's run through some of the numbers. Taxes are obviously high for a bigger building like this. $62,000 a year, $86,000 for insurance. Maintenance, I've done this. I've revised my sheet a bit. We're using this sort of the CMHC model here. So $830 a unit for maintenance.
Yeah, guys, so just for knowledge, I always run my buildings at CMHC numbers.
Yeah.
Right.
So that's what we're doing here. Yeah.
I try to be extremely realistic with my pricing, with my buildings. I could have presented this today at a 6 cap rate at the current purchase price if I wanted to take out all the contingencies.
Yeah.
But I don't. I price it at a realistic cap rate with realistic numbers. Like when you close, this building should operate maybe even better than my numbers.
Right.
And that's how I run everything for my clients so they can see that. So I run with CMHC standard right from the CMHC guidelines.
Yeah.
Because everybody knows right now that's the way we're going to get these things financed.
Yeah, like everyone's going to CMHC to make multi-res work now. Like that's the new thing these days. Like everything's CMHC.
Yeah.
Yeah.
So I'm not going to pretend that you're going to the bank getting 7% interest and making it work, right?
Yeah. So key to note, and I'm back on the rent roll right now. Like we've got 1, 2, 3, 4, 5, 6, 7 vacant columns here on the rent side. So it's actually 7 that need to be refilled then?
It's going to be 5 by the time we go.
5. Okay, so they are re-renting.
Yeah.
Okay, so there's, that's to be noted here is that this rent number is including 7 vacant units. So I just did a quick update because it doesn't really make sense to actually run this building with the vacancies or the omissions on the rent roll. So I just went in and I just applied your market rent to the units that we didn't have a rent for. So I'm assuming that they're vacant units. And with that, it brings our rent up. And this is something that could be done pretty quickly, assuming all 8 of those are vacant. You could pretty quickly go in there, market them, and finish the rentals, market them, and then re-rent them. So if we can get that up to all those rented, that's a $44,000 gross rent on the $7 million purchase. That works out to be about 4.9% cap rate. So something that seems like it's happening in the market right now, especially with these CMHC programs for financing, is like would you say that's a pretty standard cap rate that you're seeing stuff trade at?
That's spot on.
Yeah. Okay.
I can confidently say, Andrew, $7 million is going to be the sale price for this building.
Okay.
And not a penny less.
Not a penny less. So that's like that's deal pricing.
I have comps.
Yeah.
That support this over and over. Right. It's.
All right. So now we got to look at the financing strategy. Like how's this going to be financed? So there is an assumable CMHC mortgage there from the seller, but we don't have full details on that right now.
Yeah. So my understanding of that mortgage, and again, I don't even want to dive into it. I have new CMHC terms.
Why don't we just talk new CMHC terms? Because we really don't know. We really don't know what's available.
Well, so here's one structure, and I won't talk specifics because I don't know. I'm waiting on a copy of the COI.
Yeah.
From the vendor, so that I can verify and confirm. Now the COI for anybody is the confirmation of insurance.
Okay.
From CMHC.
Oh, okay.
So it's like the document. It's basically your commitment that lays out all the terms, saying here's our insurance. It's going to the lender.
Yeah.
Lender's good to lend, right? So if you ever hear us talking about COI, that's what it stands for.
I'm glad you clarified that.
Yeah.
And I was also wondering, like, would CMHC, like, say there was a $3.5 million mortgage on that building, but you wanted to get it up to a 6 or so, like 85%. Would they do the sort of bank concept of blend and increase?
Correct. And so with this particular mortgage, there's and we've mentioned this in the previously on the podcast, but it's a pari passu. Right?
That sounds like maybe a term I've heard before, but I don't know what that is.
And so essentially, it allows the CMHC to top up.
Okay.
That's blend and extend.
Blend and extend, blend and increase, top up. So in other words, somebody could go in, assume that mortgage, but then that means they're coming in with the balance as cash.
Well, maybe that's where VTB comes in.
maybe that's
My favorite
where
word.
maybe that's where a VTB. So there's a creative strategy there,
Right. So
or you go in and you get institutional at say 75%, and then apply
like
for
a bridge.
CMHC as a bridge.
Yeah.
That would be something. So let's just say the end result ends up being you're at 85%, by 5.95 after you go through the gymnastics.
Yep.
You're on a 40-year AM, 4.75. Can you do that now? Bond rates are down right now, so I would assume.
Oh, Andrew, we're 4.25 right now.
4.25.
Yeah, we just did a deal 4.25.
4.25. Okay, so right there, we're looking at cash flow at $2,900 a month, but keep in mind there's still all those other units that, I mean, normally buildings are about a 20 to 25% turnover per year on tenant base, right? So if you start turning over units and bringing them up to market, we're going to be looking at maybe we add another, like what would another, like say we do another 10 grand by the following year.
Yeah.
And so if you add 10 grand to this monthly rent, let's just add 10 right on top with natural turnover. Oops, it didn't like what I did. Plus 10,000. So if you add an extra 10 grand right on the top, now you're going to bring the cash flow up to 12 G's a month. So there is a strategy. The cool thing with this one, and it's by no means a perfect deal, but there is a strategy there to actually turn on some pretty big cash flow.
Yeah.
With relatively,
well, what's your definition?
I mean, relatively little.
What's your definition of a perfect deal? Right?
There isn't one. So I'm just trying to point out that like there is no perfect deal. Like every deal is going to you're going to have to take a strategy.
Yeah.
To make it work, because that's the truth about Ontario right now. Like the turnkey, you're going to pay big dollars for turnkey.
Yep.
If you want, it's like, what's a turnkey, fully stabilized market rent building trading for in London?
Cap rate wise?
Yeah.
Depending on age of the building, location of the building.
Yeah, like say it was like brand new construction, like top
right now today.
Yeah.
5 cap.
It's a 5.
Yeah.
But there's no upside.
There's no upside.
So it looks a little bit better on the purchase, but you don't get to improve it. Yeah.
Like value add caps are trading lower.
Yeah, because there's obviously upside.
Than stabilized, right? And that's usually the case because you have that upside, right? And you can't go into a value add and say, oh, because it's a value add. Like at the end of the day, the dirt and the brick is worth something.
Yeah.
Right. And that's the challenge sometimes, right? And that's why when you look on MLS and you look in like Kitchener and you look in Cambridge and Burlington and Oakville, like you're looking at these numbers and you're like, it's a freaking 2% cap rate. Like, what the heck? But then you look at $1 per door and you're like,
because that's why they stopped looking at cap rates, or a lot of people stopped talking about that.
Buy the dirt for that, right? Like, so it's, that's the challenge sometimes you get. It's like if you fall so far behind on your rents, on your escalations,
then you can't be looking
turnover,
at cap rate as the
you really isolate yourself, right? You got to stay on top of your rental increases.
Yeah,
and above baseline even, right? That's
like do you do special application?
We can always look at, right? Like I was talking to the client the other day. He has this building. He's got 50% of it turned over, 50% not. He hasn't done cash for keys. He's not going to do cash for keys. That's not his game, right? But he's got a 5-year time horizon to kind of complete his project. Like that's his goal, right? 5 years, he wants to get everything turned over. Yeah. And so we're going to start. So I told him we were working through a few different things. And I said, well, why don't we start with above line increase? I go, his utility bills are through the roof for delivery charge. And I said, your taxes have increased and the rent hasn't been increased in 5 years. I go, like, you should really look at it above baseline. From everything, from I understand, that's a perfect case to get an above baseline increase. Yeah. Okay. Especially with the inflation today. Right?
My understanding of that was that it was if you did something like to the unit to make it better, you could apply. So you're saying it's if you have special circumstances, you can apply as well?
Yeah. So you can. My understanding is you can apply because you've upgraded the building.
Okay.
Right. And but you can also apply if, like, from my understanding, correct me if I'm wrong, put it in the comments, but it was like if your taxes have gone up.
Really?
Right. Like if your utilities have gone up, like this building in particular has a service because of where it's located. It's kind of like further out from the city center. Yeah. The service charge to get the water there is like ridiculous. I've never seen it so high. Yeah. Because they recently
close to downtown.
They recently put new pipes in.
Oh yeah, they resurfaced
not
the
this
road?
Building.
Oh, you're talking about a different building.
Sorry,
okay,
not this building, Andrew. No.
Yeah. Okay, gotcha. All right, so looking at this, I just want to make a couple of comments. So if you look at the cap after you can increase the rents, like say you can get them up to 54 and then eventually 60, but if you're at 54,000 in gross rent per month, that would now look like more of like a 6.5 cap based on what you paid.
Yeah.
And now, of course, there's some reno dollars to be factored in, so you may want to add that on to your purchase price. So say you reno and you're at like 7.3 after you do all that. 7.3. You're at 6.2 cap.
Yep.
So there you're seeing that's how you kind of improve your cap better than what you're just going to see on the market. All right, so a couple more things to point out is, we did just get that round utilities number. It's not a small one, 45,000. So that's to be confirmed.
I had this rant at the beginning of the episode too, right? Where I'm sitting there saying, "Oh, these people, you don't have your number."
So that's to be confirmed.
Yes,
that's to be confirmed.
All of this is to be confirmed, Andrew. We are, like I said,
this is not yet available. This is a
going through that data room process. We have to verify the numbers still. So this is a building coming out in the new year. Wanted to give our listeners, our viewers, a little bit of flavor on it before we go.
It looks like a deal that's got some potential. It's all going to come down to the strategy of acquisition, what you're going to do with it. And then, of course, anybody thinking about doing this deal, like you're looking at being in for $1 million after you get your refi, your blended increase done. So it's not like everybody's going to be able to just do this deal.
Yeah.
But for somebody who does want to put that $1 million in, like I'm calculating a 12% cash on cash.
Yeah, and Andrew, it's like the market's harder and harder right now. Yeah. Like it's not, Ontario does not have a market at this point where people are doing full burrs.
Yeah, and unless you can do a crazy good deal on the buy, which is possible.
I haven't seen it.
Well, no, this is with the off market sometimes, or there's always something that people miss. Like there's a deal out there that people are just not getting it. They're missing it. But it's not the rule. That's the exception.
Yep.
And but with that said, we are going on long because of our big rant at the beginning of this. Yep. So where do people find you if they want to learn more?
Yeah, so link below, guys. You can go there. I know there were some issues with it last week.
Yeah, the link's repaired now.
So I know that I checked it this morning. The link's good. So I apologize, guys. There was just an issue on the hosting side of it. But the link is active. Go to the link, sign up. We'll get in touch. If you don't want to go to the link, you can always just send me an email as well. Like I'm happy to send we'll put my email in there.
Okay.
Yep.
All right. It's Jacob at
Investments Group.
Jacob at investmentsgroup.ca.
Yep.
All right. Cool. Cool deal. Just finishing my thought. I'm calculating 25% annual return on that. Not cash on cash. Cash on cash is about 12. After you get it stabilized to that point and get that rent way up to 54, there's some stuff to do, but it's just an idea that hey, it is possible.
Cash on cash is nice. I like that.
It is possible to do a great deal in Ontario. You might just have to work for it.
Yeah.
So, anyways,
there it is.
All right, guys. We'll see you again next week.
Thanks, guys.